So this is the journal entry for a company that pays dividends. All right. So on March 1st, your corporation distributed $350 in cash in dividends to stockholders. All right. So dividends are paid by cash. Okay. So we have a debit that we have to figure out and a credit. Well, let's start with what we can touch, the cash. Cash is going to be leaving, all right? So it's going to be a credit, right? Cash is out of here. It's gone, right? So our assets are going down as the business. So we have cash going down of $350, right? $350 of cash out of here, gone, right? That's getting paid to investors, okay? So assets are going down, but we've got this equation, all right? So credit, cash, we know cash is leaving, of $350, okay? And, well, what are we going to call it? Well, it's not an asset. The debit is not an asset, so we can't put it as an asset as an increase, right? Liabilities, it's not really paying a liability. What it is, it's something that's impacting our owner's equity, all right? And it's a dividend, all right? Dividends paid, all right? And it's going to be 350 right here. And it's going to be an owner's equity account, and it's going to be something that actually impacts our owner's equity. It's somewhere in between income statement and owner's equity that it impacts this, but we're putting in our owner's equity as dividends paid, all right? Dividends paid of 300. So that's what our journal entry is going to be. We're going to have dividends, D-I-V-I-D-E-N, dividends paid of 350, all right, as our debit. So our debit is dividends paid and our credit is cash. And this is how we distribute it. And you'll notice that it's a very similar entry. If we chose to do treasury stock instead of dividends, if we were just repurchasing our own shares on the public market, then it would be debit also, but it would be a treasury stock. It would be called treasury stock. Treasury stock, if you can read that, as a debit to owner's equity. If we were, instead of paying cash, or instead of issuing dividends and paying cash, we use this cash instead to buy equities back on the market, then it would be an entry to treasury stock under owner's equity. But that's not what the problem is. The problem says dividends right here, and so it's a debit to dividends for this